Top across to Latha, the CPI data was good, and what's the impact on banks as well as NBFCs? Latha?
Well, the headline CPI for September has come in at 1.54%, and that makes it a 100-month low or something. It's an 8-year low. The important point is the month before was 2%, the month before was 1.6. So if you take the July, August, September average, it works to 1.7. Now, the Reserve Bank had just lowered its forecast to 1.8 from some 2.7. So even much below their aggressively lowered forecast, you are seeing an CPI undershoot. The good news or whatever, the news on CPI doesn't stop there. The October CPI now is expected to be 0.5%, 0.5 or 0.6%. That's the CNBC-TV18 poll indication. So you imagine a Reserve Bank MPC going into the conference on December 6th. They have with them two readings, which is below their mandate. The mandate is 4% plus or minus 2%, which is inflation has to be between 2 and 6. You're going with actually 3 out of the last 4 months below your mandated range. So chances are it is extremely tough for the Reserve Bank to avoid a rate cut. Even the forward-looking CPI numbers, which they normally allude to, have to be brought down considering the undershoot. And therefore, the market is penciling in a rate cut in December. What this will mean, of course, is more pressure on the margins of banks. That's what stock market would be interested in. And it would be good news for NBFCs. But, I don't know if this is really all that fresh bad news for banks. One rate cut was always there because the Reserve Bank governor in the press conference in October clearly said that this opens up space to support growth. It was only the timing of the rate cut, and now more and more people are penciling it in December. I don't know if it's a solid bad news. It is certainly good news for FMCG. There is more purchasing power in the hands of people because inflation is eating less out of their money.
Thank you very much for that.